All right, everybody, welcome. It is December 30th. One more day left in the year. We've got a good up day going today. Just turned green on the session, up about 3 points. Let's get into it. Lots of things to cover today. We'll take a look at some of the markets. We'll take a look at some trade ideas. We'll take a look at the accounts, and we'll try to answer any questions we can for you as well. All right, so let's rock and roll and get into it. All right, let me get off the screen. You should be able to see by now. And there we go. All right, so hopefully you can see my charts up on the screen. Let's get started and take a look at where the markets are. So right now, the market itself is just up a few points, $2 on the session. We'll see. We're right at this previous pivot high from back on October 30th, where that was the previous market high, had a pretty good dip down, recovered, and then set a new high last week. And then we've come down and we held it on Friday, or yeah, I'm sorry, we held it on yesterday. And then today we're also trying to hold right on to that line. So I think it's an important line that could act as a good support level for us to continue to move higher. We don't have a lot of volume here, so not a lot of stuff that happens this week is going to be super important to the overall market. But again, the charts are the charts. And I'm going to stick with the daily weekly chart here. So a little different than we've had in the past. I've been using the daily only, but I just want to get a sense of where things have moved through the year. ES doing just fine. Yeah, you've got the 8 above the 21 and getting wider. Stock well above the 21. You got RSI rising above 50, almost to 60 points here. MACD is starting to roll over just a fraction, but you do have a bullish PSAR as well, and that's also right around the anchored VWAP. So everything here is pretty bullish. So ES, there's no reason not to be bullish. If we take a look at the VIX, it's down at 14. I normally don't really pay much attention to this thing. It's a dead tool, but if you look at it, I mean, this is about as low as we've been since about July of this year, when maybe we were down around the 11, 12 mark. This is a pretty low VIX, which means there's just not a lot of volatility happening. There's just nobody worried about much of anything in here. So it's a good sign for the markets. I don't put a ton of stock in the VIX, but the fact that it's low tells me that people aren't really too worried about the markets at this point in time. Things look bullish. I think we'll keep that bullish tint going. So what does that mean for us? Well, I think you can put on 112 trades here. I would not want to go all in. I don't think we're not overbought by any stretch, so I wouldn't be all that cautious. I think a standard 112 trade is not bad here. I would not be doing probably the BA or the FB or even the ATM 112s. I don't think you need to put those on because we're really not at an overbought level. We're not at the Bollinger Band. We're not overbought on RSI. It's all just pretty smooth and calm in here, which maybe that's scary in of itself. Don't get complacent, but I wouldn't go out and spend all my money today buying stuff, but I think you certainly can look. So 112s or any other types of plans, trade plans or trade strategies that you like, I think might be a good idea. Please let me know if my sound breaks up or we have any issues here. I'm getting a few internet unstable type of things, but we'll keep plowing through this as much as we can. So we're bullish on ES. If we take a look at oil, continues its downtrend. You can obviously see this, the big downtrend still very much alive and in play. Okay, so we remain inside an overall really large downtrend on the weekly. We're still in this bit of a descending triangle as well. Now we have held this 55 level, which dates back to some support back in April as well. We've bounced off of it. The 8 is still below the 21, although the stock is above the 21. You have a bullish PSAR, and you've got RSI rising. So those are fairly bullish traits on oil, even though we're in a downtrend. So if you look at the weekly, it's all bearish, right? Or, bearish PSAR, 8 below the 21, stock below the 21, RSI below 50. So the weekly is definitely bearish. The daily, it's kind of neutral to even slightly bullish here on this. I think it's a really good setup for Strangles. The 112 trade may not be the best in here, although I think if you feel um, that on the shorter term trend, we're doing okay and that we maybe have some support down in here, you could consider a 112 trade. I think the Strangle's the better trade opportunity, but I think you could go either way. Let me double check. Yeah, Scott, we can do that today. I think this would be a good day to do that. So we'll get into those. And in fact, we'll stop here and do a quick 112 strategy catch up. So on the 112, you can make almost anything you want out of a 112. A 112 is essentially a put ratio spread where we've moved things around a little bit. So instead of having the little tiny triangle at the far end, we widen out that PDS part of it and separate it so we're not sharing the same strike. But the profile is similar, but the 112 gives you a nice trap if, and that's a big if we start to head lower. And I think and it does pay off. Back in 2022, I had like an 82% return on the year. And the reason was that we hit more than 50% of our 112 traps for the year. And that gave us the bonuses that we wanted. It's not a hedge, it's just a bonus if you fall into there. And I really like that opportunity. So you've got the standard 112, which is, you know what, we'll go model these out in a minute here. And we can look at oil and ES because I feel both of these are potential 112s and for some different reasons. Let's take a quick look at gold and bonds and then let's jump in and do that a little bit here. All right, so gold futures, pretty monstrous candle yesterday. This is an inside day today, which could be totally disregarded. Nothing that happens today is important. This is a monstrously giant red candle. It's going to take some work to get out of this candle. I'm not saying gold's going to zero or dropping heavily right now, but this is a large bearish engulfing candle. This bearish engulfing candle took out almost 2 weeks worth of gold gains in one day. Today, we are definitely off of our highs. We hit the 8 and fell back down. It's an inside candle day. I'm still bullish overall on gold. If we look at the weekly, whoa, let me undo that. Where's my undo? Why am I missing that? I don't see my undo button. Where is that? We'll fix it later anyway. So when we're looking at the weekly chart here, things are pretty. Just take it off. Things are pretty bullish, right? There's nothing really wrong. You had a big bearish, bullish engulfing candle followed by a bearish engulfing candle from a weekly standpoint. However, the daily, we triggered a bearish PSAR yesterday on that move. Okay, so we came down far enough to trigger the bearish PSAR. 8 still above the 21, stock still above the 21. RSI went from overbought to back to the middle here. Still bullish overall. So if we're looking at gold, I'm still bullish. I still think a 1-1-2 trade here is not a bad strategy. I also think strangles are not bad. It's readjusted itself a bit. Yesterday was really great for our strangle because obviously when you have a strangle and you've been just drifting higher, and we have a strangle has been on for 40 days now, so it's been on a pretty good amount of time. It's up 17%. But that strangle's been up 40 days for over a month now. And we've done nothing but go higher, higher, higher. But the strangle was not in trouble. And then yesterday, this big drop really was healthy for our strangle. And that gave us a really good boost to our P&L yesterday. But we're up on that gold strangle. We're in a spot right now that I don't think this is a bad spot to put on another gold strangle. I think we're going to have some work to do to get out of this bearish engulfing candle, and we could see some sideways action for a bit here. So we'll talk about 1-1-2s and we'll look at this, but gold, I still consider it bullish and in a 1-1-2. All right, if we take a look here at bonds, bonds are in this channel to the downside. You know, we've been to the bottom, we come to the top, we go to the bottom, we're almost back to the top. So we're almost really back to the top of this regression channel here. The key is, do we fail at it again and just keep oscillating sideways? I think when you look at the charts, we are bearish, okay, on the weekly. So the weekly overall is kind of somewhat neutral to bearish. And then really when we're looking at the daily chart here, it's definitely a bit more bearish than anything else. But PSAR flipped recently. We're back above the 21. The 8's not above the 21 yet. And RSI is back to 50. So I do like strangles on bonds in here. So I do like this. And anytime we come back to the bottom of this channel, I think that's a good opportunity to sell naked puts as well. Right? Yeah, I mean, it's totally up to you. If you think this pullback yesterday was all you needed to get long bonds, knock yourselves out. If that fits your plan, and it's not the worst thing in the world, but I want to see a little bit more resolution to this thing here. This is an inside day. I think we could very easily continue some downward pressure, maybe to the 50 or this upward channel, or maybe we just hold the 21 and move higher. Not the worst spot. Okay, I like to just give it a little time and show me that maybe that move was temporary. And then real quick, if you jumped in on silver, this is very much of an inside day. So yes, we recovered a bit on silver, but that's a very big bearish engulfing candle. Today's going to be another inside day. Okay, it's just a kind of a dead cat bounce a bit today, like gold. Silver's near its highs of the day. Gold is not. Okay, gold is not near its highs of the day, so it's not showing the same strength as silver is. I think this is a good opportunity if you had a good run on silver to maybe take some profits off. I don't think I would be jumping in here on silver anyway. All right. So there you go on those. We'll spend some time on the 1-1-2s in a minute. Let me just knock out some charts. We're pretty flat here on Amazon, and that's pretty good for us considering we have a strangle on. That strangle's up 31% in just 8 days. I think it's still setting up really nicely here for a good solid strangle on Amazon. I'm not long. Although I am long in my investing accounts, everything does look good here to be somewhat long and to enter here. I don't think it's a bad spot if you're not in it and you want to get in. I don't think there's anything wrong with it. I also think a strangle at this point in time is not a bad play. NVIDIA looks pretty good in here. Everything is a go. Okay, 8 above the 21, stock above the 21, bullish PSAR, and an RSI over 50. I think this is a good spot on NVIDIA if you wanted to get in. Okay, the Santa rally is not really happening here, but I don't think that this is a bad spot to get into NVIDIA if it's something that you like and you have a plan for that. Right? Tesla pulling back. A nice hammer candle today, trying to hold on to the 21. It is bearish, okay, on the PSAR. It's below the 21. The 8's still above the 21. And an RSI is right at 50 in here. I don't think it's a necessarily a bad entry point, and we did fill this gap yesterday. So the gap got filled from back here, which is a good thing to see. This could be a good opportunity on Tesla. I'd give it a day. Let's just see what happens. I'm in no hurry. Meta just continuing to repair here, a bit of a cup and handle, and it's just moving sideways. I think Meta is also a good strangle trade. Boy, the Bollinger Bands are getting very, very tight on some of these. Uh, Tesla is pretty wide but narrowing, okay, which means volatility's coming in. Meta, pretty tight as well. If we were looking at Amazon, getting tighter. Okay, so something's going to move one way or the other decently here soon. Apple, good pullback. I don't like it. Most of it is pretty bearish. I'm bearish on Apple here. Google, breaking out of this uh, channel that we had. And we'll just leave it here. Trying to break out of the channel. I don't know that there's a really good way to draw this thing in here, but really just sideways. I think this is also a pretty nice, little strangle to bullish setup. So I think like a jade lizard would be a good thing on Alphabet in here. Anytime that you get a strangle setup and a bullish, like a 112 or just an overall bullish setup, I think a jade lizard is a really great trade strategy. So Google, uh, I think a jade lizard is a good play. Anything bullish. All right, Microsoft trying to bounce here, looking better. It's its mojo going. Looks like the 8's about to break the 21. I think this is a good entry spot on Microsoft. If it's something you like, I don't think this is a bad spot for you to get in on it. Palantir, just again, sideways trending like most everything else. There's just kind of a no direction to the market. It's just sideways, which is really great because we've had strangles on Amazon, strangles on SoFi, a strangle on UNH that we closed today, a strangle on Strategy. It's just been a great environment this last couple weeks on strangles. Here's another one, in my opinion. Bollinger Bands are pinching in, okay, which means volatility is coming in on this. I think a strangle setup is not bad. Is the pullback over with? I don't know, but it was almost tweaking a bearish PSAR today. That's the only thing uh, keeping us neutral right now. If we flip that again, we'll absolutely be neutral. I don't think Palantir's a bad strangle setup. Hood also pretty much just a consolidation zone, but this is much more bearish than most. 8 below the 21, stock below the 21, bearish PSAR. Below the 50 RSI. So we're in a bearish mode in Robinhood. I wouldn't be touching it yet. I think there's some support right below here, so I don't think it's a bad spot to enter. But why rush it? Netflix consolidating here at these lows. Broadcom. We still have a gap to fill down here, but we also have a gap to fill above. Which one's going to win? Don't know. Bearish PSAR, stock below the 21, 8 below the 21 RSI. So this is in a bearish mode right here, even though we've had a nice bounce off of the Bollinger Band in this lower area. I'd like to see this Bollinger Band bottom start to curve back up a bit, but I think this is also a strangle. This thing moves a lot, so strangles might be a little sketchy on Broadcom. And then look at, again, just another one here. SoFi, just a perfect strangle setup. We're in a bunch of these already, but you can be running strangles all over the place on it. All right, let's just cut through shop, which we are already in with a what are we in with shop here? We are in a put credit spread on shop. this 150, 145 level down here. I think this is where we are. Sorry, my voice is pretty scratchy today. 150 level here. This is our 150 to 145. Okay. That's our put credit spread down here. Pulling back a bit today, but still positive. 8 above the 21, stock above the 21, bullish PSAR and RSI up. However, we are starting to dip a little bit here, but spread is doing just fine. It's done nothing on this move, right? App 11, I like it here. It's just got to get through this resistance level, a bit of a ascending triangle, didn't make it, failed to make a break through here. So now we're really just in a sideways pattern. Again, another kind of strangle looking trade. It moves too much for me. I'm not going to strangle that. Hims does not look good. Granny, sideways. If you're in granny shots, fine. Bull keeps going down. I'm out of this thing for now until it starts to show me that it wants to stop going down. This 8 is just way too far below the 21. I'm not going to play with this thing for now. Oscar, also in a bearish mode down in here. So if you're in it, I would just be hanging. If you're not in it, I wouldn't jump in until you see some resolution here. And then UNH, we just closed a strangle, and I think it's also setting up for another strangle or naked put trade. Right? So strangle, we're right at the 8 and the 50. We're right at a 51 RSI on both the weekly and the daily. Looks very strangle worthy to me. You can, pop this in here as a bit of a, an uptrend here, but overall you get the downtrend going, and this is really as much of a symmetrical triangle as anything. So if it breaks to the upside, I think we can get some movement going. I like it. I think naked puts still are the way. Bearish PSAR, however, RSI above 50, stock above the 21, 8's about to break the 21, or it's just hanging around in there. It's just been consolidating sideways. You can sell naked puts and you can put strangles on. I've been doing both. We still have a naked put. That naked put's up 30% in 4 days. I might consider another strangle here on UNH. Okay, so I'm sticking away from most stocks for now because I think there's plenty of trades to be had, and I have a handful of stocks on, but I don't think you need a lot in here. Bitcoin also just consolidating, trying to bide its time. It broke sideways out of the descending channel. Okay. Strategy at lows yesterday, okay, but trying to just hold this level. It's near oversold levels. It's bearish. I wouldn't be, mortgaging the farm on strategy, but we have a strangle on, which is doing just fine in here. And I like where we are on the strangle, and our income poor man covered call trade is doing fantastic. All right. So that being said, okay, level for a new naked put on UNH. Let's look in there, but if I'm going to do it, now UNH does have earnings coming up. So if I was doing maybe we'll look at the charts here, but I'd probably be looking like the 310 level. Oh, I'm sorry, on UNH. So let me just put the chart up. I'm probably looking at the 310 level or 320 right down here. So this is your Bollinger Band at 320. You've got the anchored VROP right at 318 as well. So both of those providing decent support in here. You get this previous pivot level here at 319. And then I think anything under 319, and you could do the 315, which is the expected move, or you could do the 310, which is like a 17 delta. I'm a big chicken, so probably the 310 makes me feel more comfortable, but the 315 I don't think would be bad. So I'd be looking at the 315. You can take in about 335 bucks, so $3.35 on this thing using only about $3,000. So it's a 10% return in 24 days. if you take profits at 50%, you'll make 5% in, I don't know, maybe 2 weeks or so on UNH. I think that's where I would be targeting right now, the 315 or the 310 level, if it was me. Um, so on an anchored VWAP, I like to find a swing low. Okay. So the swing low here on the weekly chart, which is where I used it back in July 28th, that was a swing low. You could also, from a shorter term perspective on the daily, this would be, if I'm looking at this chart, there's the most recent swing low. And I looked at, has this anchored VWAP done much of anything? Yeah, I don't know. We did kind of hold it here, and we bounced. We were below it for like 2 days, and then we're above it. So this anchored VWAP, might hold up as well from this territory. And you can also throw them from up above from previous swing highs, like this swing high here, to give us an idea of where some resistance might be. Okay. And look at where we are today. So we are right, failed, failed, and then again, a bunch of days. Hey, we've tried to break through this anchored VWAP to the upside. So it's holding up pretty well. If we break it, then maybe that's a really positive sign. But we have not been able to get through there yet. So this is a bit of an anchored VWAP pinch in here. We're stuck in between. A break either way would signal maybe a decent change in direction. Things look more bullish than bearish overall. So I hope that helps. But I just find strong pivot lows or pivot highs, and that's where I'll put the anchored VWAP. That's where I'll anchor it. Okay, so hopefully that makes sense. There you go. And then really quickly, Ethereum, same thing. It's really consolidating down here, which I think is a really good sign. I think crypto is setting up for a January move to the upside. Everything is building up for a move. I think the move is higher, not lower. Okay, but again, we'll wait and let the charts tell us what to do. Okay, but I really think crypto setting up for the move. Bitmine struggling down here as Ethereum struggles. Okay, but I think this is setting up. And if you look at Bitcoin, same thing. These things are really consolidating. Look how tight these Bollinger Bands are. And now we're starting to make a little bit of a move. I think you wait till January. Okay. I said we would probably struggle into the end of the year here. And we're not dying. We're just consolidating sideways. We're just chopping. I think just be patient. If I think Bitcoin's coming in January. Might not be for a couple weeks. So just don't go hog wild yet. Just be smart about what you see. All right. All right. ES down a bit today. Just can't seem to get anything going. All right. Let's get into, let's talk about some 111s. Tom Lee expects crypto to go down in the first half. His analyst for crypto, his technical analyst, does not agree. His technical analyst for crypto is the exact same levels that I have, where he thinks a rally is coming here in January. So it's kind of an interesting fact that they have that him and his head technical analyst guy, they are not on the same page, which is pretty interesting. But I don't know what Tom Lee's view is on it necessarily. I know his views on the market. He thinks we're going to have another 20% drop and then a big rally in the second half of the year for stocks. I don't know about crypto, but I'm more of a TA guy than people's opinions. So I'll just play what I see and let's take it from there. But I think crypto looks like it's consolidating. All right, let's jump into the accounts and let's get some trades on. All right, hang on. I got to move the chat out of the way. We'll share and let's take a quick look at the account today. Okay, we had a great day yesterday. Why? Well, a couple things happened. You had a pretty good oil rally yesterday, which actually gave us profit on our 112. So we actually took that off. So now we have an opening on oil. I said a strangle was a good play. We're already in one, so or I'm already in one. I'm up 20%, 18.5% right now. So nothing for me to do on that strangle. If you wanted to 1-1-2 it, we have a 49 day and a 77 day. Let's take a look at the 49 day and see how this thing sets up. If I would put on like a 1-1-2, and there was a question on 1-1-2s earlier too. Um, when's a 1-1-2 more ideal than a put credit spread? Um, Put credit spreads to me, here's the problem with put credit spreads. Okay, the decay is so doggone slow, I almost never do them. Okay, I happen to do one on shop, which I probably regret. Okay, I did it just to save some BP and put on a nice little spec trade, but I really like the naked put. I think the naked put is easier to, if you want to roll, it's easier. It produces faster because on the put spreads, the long put is also offsetting the gains of the short put decay. So as the short put's decaying, so is the long put that I bought. So it's slowing down your overall profit. Doesn't mean you can't get there, okay? But with a put credit spread, okay, I would only be doing that in a small account, and I think it's a great strategy in a smaller account, okay, because it doesn't use up a lot of BP. Okay, you don't have to be perfect directionally. You just have to be somewhat right directionally, and time isn't as important either on it. And if you just can't do the naked put, then a put credit spread's fine. Other than that, they decay way too slow for me. Same thing when you're doing a put debit spread, which is part of the 1-1-2. Okay. Even if the market drops, they don't help you. Why don't they help you? Because the decay of the short is offsetting the gains and the decay of the the gains of the long. So it's until you get close to expiration, spreads don't move much. Okay, so longer term spreads don't give you much help, whether it's a bull put spread or a put credit spread or a put debit spread. Either way, they are too slow for me, um, and I don't typically like it. So the 1-1-2 gives me the long naked put, or I'm sorry, the short naked put, okay, which decays much faster than that put debit spread that's in there. The put debit spread is only there to give me a little bonus if I'm kind of wrong uh, on it. Otherwise, I think the naked put is the better trade. And the 1-1-2 is essentially just a naked put trade, and I spend a little bit of my cash on a put debit spread that almost never wins. So why do it? Well, I do a lot of naked puts. Okay. But I do it because if the market does start to turn or I'm a little bit wrong in direction, not, and time is it's not dropping fast. Okay, I can make more money with the 1-1-2 than with a standard naked put as well, if I'm a little bit wrong, which I kind of like. All right, so let's keep going on oil here. We're going to look to put on I like these narrow spreads. Yep. Yeah, speed of the down moving to 1-1-2. Well, it's the same as any put or ratio spread. It's the same thing. It's a 1-1-2 is no worse than selling a put. It's no worse than adding a put ratio spread. It's the exact same trade. Okay. People don't talk about the fact that a naked put doesn't do well if we drop fast either. Okay? Everyone likes to just point out, well, the 1-1-2, it's so dangerous. It's no more dangerous than a naked put. Okay. In fact, it's actually better than a naked put because I have at least a little bit of a chance with the put debit spread to make some cash. Okay. But yes, speed is not your friend on the 1-1-2. So the 1-1-2, same as a ratio spread, same as a naked put. And if I was putting the naked put on here, maybe 48. Let's take a quick look at this. All right. So quick look. Boom, boom. When my voice is really fried, I have no idea why. All right, so this would be a 49-day 1-1-2. Again, you could just sell a naked put at 48 if you want, okay? And you're going to make a lot more money, okay, on it. you're going to make $520 if you just sold puts on this, okay? As opposed to spending an extra, $100 on this, but I'm fine with it because I can still get 430 bucks using 31.91 in 49 days. Okay. You don't have to be a math genius to figure out that $420 on 31.91 is a pretty good percentage. It's over 10%. It's actually 13.1%. I like this. So I like this 112 on oil here with a 48 on my put. Okay. I like this trade. So let's actually put this thing into the Discord. And again, always on these, I will post these trades in Tom's Resources, trade ideas in the Discord. Tom's Resources, trade ideas. And this is a CL112. Okay. I like this. In fact, I like this thing a lot because of the narrow. Usually I'm one strike wide, which is fine. We'd still make over 10% with a bigger trap. Okay. But I like the fact that I get the half point. I'm still going to make twice as much money in the trap instead of 3 times as much, but I make a lot more money in the tail. I really like this trade a lot. So let's actually, I'm going to put it on. We'll see if we get filled. All right, so I like that trade a lot. We'll talk more about 111s and 112s when we get to ES here. We'll look at the different types. All right, so everything is good here. We got a naked put here that's at 82%. So we're within, it's been on for 29 days. These come off in 45. So within the next week, I would expect that this one will probably hit 90% and give me a winner. This one's down to 62%, still got some time to percolate. And then we got another naked put down here. So we've got 3 naked puts of 112 trades running. And then we have our at the money 112. Okay. This thing's up 90%. Let's take a look at this trade. Okay. It's up 90% right now. Okay. So we can actually see the whole trade. So you can see that we put it on at the money, and when we say we put it on at the money, the put debit spread was right near the price. Okay. And the price is just in the trap. So this looks pretty good. And if you think of what could happen over time, you can see how this T+0 line is lifting decently. And if we look at, over time, look how this thing's going to lift if we stay right here. Okay. If we drop at all or stay here, we're going to start to make even more profit on this trade. So we're going to exceed the 100% mark pretty soon on this trade. Okay. So right now, the most we can make on this trade is 1,700 bucks, right? So the most we can make is the 1,725. Okay. We're at 90% of that right now. Okay. I'm not taking this off because if the market at all sells off or stays exactly here sideways, we're going to start to make closer to that 17th. If we rally, we'll make the 1,700 bucks. If we just stay here, we got a chance to make almost $3,000. Okay, so I like this trade. It's coming out exactly as we had hoped it would. So it's a good trade. So let's talk about this a little bit before we move on. Today is also, I closed out a 120-day naked put. So I do want to get a new one of those on. But let's take a quick look. So let's get into the different styles of 112 trades. Okay. And the market right now is not overbought. Okay, it's bullish. It looks decent. My standard 112 trades would all be about 60 days. Okay, so we're going to go out here to about 59 days, and we're going to put on all the different 112s, including an at the money 112. So I'll do that as well. All right. So a standard 112 would be roughly 25 delta there. I go about 50 wide, and I'm around 7-ish delta, something down here. Let's just for the heck of it, we'll go 8 delta on this. I like that. I like these strikes. Doesn't matter. We can go to 7 here, which is fine. Okay, so this is 50 wide. Let's take a look at these trades. And let's just go through a bunch of 112 types of trades. Okay. All right, so here we go. Here's the standard 112. This is a 50 wide, okay, standard 112 trade that we put on. Okay, we're going to post this because I do like this trade too. Okay. I wish I had a lot more buying power and a lot bigger account. All right, so here's a standard 112. I'm posting this in the Discord. Okay. All right, what are we going to get in the trap? Well, we're going to make around $1,600 in the trap. Okay, $1,610, and we're using 14,729 of buying power. Okay, this is a 11% trade if we stay in the tail up here, and then if we start to sell off, okay, if we sell off fast, you can see the T+0 line starts to go south pretty quickly. Obviously, that's not ideal for us, but again, it's a naked put. Let's do this. Okay. If we just sold a naked put, what's that T+0 line look like? Okay, it looks the same ugliness, right? It's still going down. Okay, so again, it's no worse than just owning a naked put. Okay, let's get back here. Hang on, give me a second. Let's put on. Oh, I think I removed the wrong thing, didn't I? Give me a second. Okay, no, I was right. All right, so again, this was the naked put. Again, it curves down just as ugly. Okay, if you did a put ratio spread, okay, down here, I don't know, there's a perfect setup. Okay, here's a funky looking put ratio spread. Okay. This is a 3-to-1 ratio. I mean, you can do whatever ratios you want. Okay. Let's do a 2-to-1. Okay, so here's a put ratio spread. Okay, what does this look like? Again, you got a small trap here, which is almost impossible to hit because it's so small. Okay, and look at the T+0 line. It's also going to hell in a handbasket. Okay, all right, so it's no better of a T+0 line than a 112. Again, the 112 is no different than this trade. Okay, let's put on. Okay, but let's go to a 113. Okay. So the 113 is the exact same thing as, okay, a 112, okay, or a 1-3 put ratio spread, same thing. Let's go up here, okay, and I'm going to tweak this a tad. Hang tight, hang tight, hang tight. Dang it. Okay. All right, so if this was the case, I mean, this would have been our, okay, this was our 113, something along this lines. But what a 112 does is, all right, we take part of this and we just roll it up, which makes the trap just wider and bigger. And to me, it's more generous this way. Okay, so now we just get the benefits of this wider trap. Okay, it's going to give me a little bit less. Okay, it's going to give me a little. Look, the T+0 line's the same. It gives me a little less income. Okay, because I'm paying a little bit more for this long put and on it, but for the most part, this is fine. Okay, but this is essentially the 112 trade. All right, so now that we've got a 112 trade running, why not the long put more out of the money than the short puts? Out of the money? Oh, you want the long put like down here or something? I'm not sure what you're saying. Uh, give me a minute. Let's finish this thought. So anyway, this is the 112 we just did. And at the money 112, right, remember, this is going to generate us. Let me make some notes here. The standard 112 is going to generate $1,625 using 14,774 in margin. Okay. And we're getting 32.50 for this. Okay. Everybody's good with that? All right. So let's think that what if we move these up here? This becomes more of an at the money. Now, what happened here? All right. So instead of making $32, we're making $18.50. So in the tail, okay, the most we're going to make is $925, or I'm sorry, $1,100. Okay, on this one. So we're going to take in 1,100 on this trade using 14,693. Same amount uh, of buying power, but we're making probably a third less, and we're going to make 7%. Now, 7% in 60 days is still not bad. Okay, but what does this do? Well, what this does is it's increased the size of the trap. Okay, so instead of having 60, this one, so instead of the trap being down here, okay, and we could still fall to here and still only make 1,400 bucks. But if we do the at the money, okay, we have this nice same size big trap, a little less in the tail. But if we just hang around here, we got a chance to make almost $3,000 in the trap. Okay, so this would be we're using 50 points right now. Okay, so we're using 50 points, which is the standard on a 112, is 50 points. Okay, on the standard 60-day 112, according to my trade plan. Right. So the at the money here, which I will also put in the chat or the Discord. Hang tight. Yeah. The goal of this thing is, hey, the markets are a little bit, maybe a little bit toppy, or they're just a little bit flat right now and not as bullish, which I kind of think this is what the market's doing. Okay. So an at the money gives you a wider trap, less income in the tail because we moved this put debit spread, so it's much more expensive now. So instead of like a $9, okay, this thing's more like a $20 put debit spread. So it ate part of our profits, but if we only go down just a fraction here, okay, we make even more money. Okay. All right. Then you have, which is more like a little bit more jade lizardy. You could also move this even farther up. I can't do it for a profit. I'd have to move this up a fraction. Okay. Then this would be more like a jade lizard here. Okay. Where we open it up in the, we put it right in the trap. Okay. I had to move the puts up a fraction. Okay. Not a whole lot, but they were at 61.50. I had to move it up 75 points in order to put this thing on for a positive credit. Okay. But if we land in the trap here, okay, we make 2,500 bucks. And if we rocket to the upside, we make nothing, but we don't lose any money. Okay. And look at the T+0 line. So even if we do slowly go higher to here, we still are going to make money. So a little bit of more of like a jade lizard look. Right. Now let's go back, okay, here, and let's look at why would we put on what I call a BA 112. Okay, so what is the BA 112s? Okay, I'm back to my standard 112 here. The BA 112 means I don't really care about this tail. All I want to make is I want to give myself hedge is a bad word because you guys will think that this is a hedge necessarily. There's no such thing as a hedge if you don't pay for it. Okay. But what I'm going to do is I'm going to drag this way down. Look how big this trap is getting. Way down here. Way down here. Okay. Way down even further. Okay. So now I dragged the, we can even go further. Okay. So now we have a gigantic, we're still out of the trap. So if we go higher, we're not going to make much money. Okay. You can actually go to almost zero on the credit here. But look, you're still going to make this 2,700. So if you think the markets could be rolling over soon and you want to give yourself some runway, okay, then if we start to drop, you're not going to make much money at all on this 242 bucks if we stay higher. But if we do drop, okay, now I can make 2,700 bucks on $7,000 in BP. Okay. 2,700 bucks on $7,000 in BP is a 39% return if we land in this trap. But you're going to have to be right on direction. Okay. Makes sense? But I put these on when I start to think that we're starting to get a little bit overdone. Okay. And if you want to, crank out a little bit more cash, okay, maybe you move it up a bit. Okay. Where, hey, now I'm making 428 bucks in the tail using 8,400. This is a 5% return in 2 months. Okay, so it's not the worst thing in the world. I mean, I'd still probably take 5% in 2 months. It doesn't really hit my my goals, but I could do it. Okay. But if you think we could be rolling over soon, that this at some point in the future, this thing may really pay off, especially if it decays for a couple of weeks before the market starts to sell off. This could really pay off for you and give you, hey, 5% in the tail, but man, you're going to get 29.30 using 8,400 bucks. It's a 35% if we get in this trap or doggone close to it. Okay, so this is the BA. So it's BA, it's called BA for the big ass, but because this big, long trap. Okay, what does the FB do? The FB, we take it to about 100 wide. Okay, or more. Okay, so we could take this thing to 100 wide. Okay, which means we're making almost no money here, but there's not much, we're not going to lose money if the market goes higher. We don't lose. But now, instead of making like $2,000, this thing's making $5,000 in the trap, okay, because it's 100 wide. Okay. I could potentially move to put up a fraction more and use some of that money to make it a little bit wider. Looks like it's not going to do much. So, okay. So there's the FB trade. Okay, it's just fatter. That's all. Okay. If you want to get even wider, you're going to have to pull your puts up, okay, a bit more here. But now I can go 175 wide, which makes me almost $8,000 in here. Okay. So that's the use of these. I put the FB trade on when we've already topped and we're starting to roll over. I'm betting on us going down and coming near this trap. Okay. So the FB is, I use this, and this one's 150 wide. It's going to pay me almost 8 grand on 8 grand. So 100% return. Okay. When I think we've topped. Okay. It's a directional bet that, all right, we're starting to roll over now. The BA, I'm putting that on when we're getting overbought, but we haven't rolled over. The FB is when we have started to roll over, and I'm being directional on trying to actually get down close into here. Because if you look at the T+0 line, okay, as this thing rises, okay, I don't have to be right and get in the trap. I can be up here and still be making, okay, a couple $1,000. Okay. So right here, I'm making 1,600. Here, I'm making around 2,000 bucks. Here, I'm not really even in the trap much, and I'm making $2,600. Okay. Then obviously, if we can get into here, I could make 7 grand. Okay. But I'll take the you know 1,600 to $2,000-3,000 if we don't go all the way down. But if we go up, not going to make nothing. You know, we're not going to make much of anything. We just have no risk, and all we did was use BP. If you have lots of BP, then this would be an opportunity for you, okay, to use. If you don't have a lot of BP, I'd probably not be considering it quite as much. Okay. But how fat do you want to get? All right, so let's put this one in the Discord as well, and you guys can take a look at it later. I did an at-the-mine. I did not do the BA, but this is the ES FB 112. Okay. All right, so you get a chance to see. Increase in IV would push down, yeah. If let's go back to here. Okay. But yeah, volatility increases on this. Okay. Okay, look what's happening now, right? So as volatility increases, that's going to push that T+0 line down. Okay. At least temporarily. Okay. So it is going to push you into a negative spot. Okay. So as volatility increases, you're going to take on losses on this one. So again, same stop loss though. As soon as I hit a 2x loss, then I'm done. Okay. Then I'll be out. All right. So I hope this makes sense. It's always the speed on these is the same speed to the downside as any naked put or ratio spread. Okay, they work the exact same way. I do like where we are here on ES for this. I also wanted to get on a new 120-day 6 delta naked put. Okay, if you're in my you know, you can research these, but this is pretty much a campaign trade. I just closed one out for a winner. Okay, this one has a 3x loss and a 40% buying power, and it's pretty much a mechanical trade on ES. I go out 120 days, so we got a 121 day there. I'm going to go down to 6 delta, okay, right around here, and I'm going to put this on now. I'm going to take in 1,500 bucks. Okay, $1,500. A 3x loss puts me at 4,500, which is a 1% loss. Okay, so I can actually go 2 of these. Okay, 2 of these at 3,075. A 2x loss on these is going to put me right around 9 grand or so. And 9 grand is pretty much a 2% loss on this. Okay, so I'm fine with this. Let's go for it. And we'll see if we get a fill. Yeah, I mean, MES is difficult. And the reason MES is difficult when you're doing this is, all right, real quick, look at all of the expirations that I have. I mean, look at these expirations. And if I'm at 60 days, that's oil. Okay. Okay. Look at ES. Okay, look at all these expirations. And at 60 days, what are we talking width-wise here? We're talking 50-cent wide strikes, right? 50 cents wide. Okay. MES. No, MES, look how much, it's not terrible. You just don't have a lot of leaps, but you do have a decent amount of strikes or expirations here, but not quite as many. But if we go out 60 days and I start to look in here, okay, these are now, you know, $2, $1.50 wide, $1.25 wide, roughly. So instead of 50 wide, we're now $1.25 wide. It's just wider. It's again, it will work. If you have a small account, you have to do it. I do these in my small accounts. Yeah, anyway, I do the 120-day 6 delta in there because I don't need multiple strikes, so it's easy to get in and out of. Uh, I don't think it's that bad. I just don't love MES as much. But when you got a small account, 10, 5, 10, 20, 30, 50, $75,000, okay, then you gotta adapt the trades, okay, to what you can do. So I like in a small account, I really do like poor man covered calls, and I like the 120-day 6 delta naked put that I just put on here. I like those. I think you can, and you can do credit spreads in the small account. All right. There's ES, and so there's a bunch of 112s. Let's quickly just take a look at gold. And we also made a bunch of money on gold yesterday when it dropped. Our 111 dropped a little bit, but not a big deal yesterday. But this Strangle had a great day yesterday, okay, when we had that big drop. So again, that was another driver. So you had oil doing great. The ES trades were doing well yesterday with the market up a bit. And then your gold trade, your Strangle was up yesterday. And then your bonds trade, what did bonds do yesterday as well? Bonds were up decently. They're up again more today. We're in a Strangle. Didn't really have any effect on it. So bonds did nothing yesterday. They're doing nothing today. Okay. We're in good shape. We're up 27%. If I was doing a bond Strangle here today, 87 days. Okay. I like my 7 delta, 6 delta. So almost exactly what I have on now, which is the 107, 125. That'd probably be what I would be doing today if I didn't already have one on. Okay. That would be my bond Strangle. Okay. And you can do it on TLT. Again, if you don't like futures or don't want to trade futures, you can do the same trade on TLT in here. So let's put this in the Discord as well. Trade ideas. This is a ZB Strangle. Gold Strangle, if I was doing it here. Again, whatever. I'm pretty doggone mechanical. I like the 90 days. Okay, so if I was in gold, okay, I'd find the closest thing to 90 days, which is this 86 day here. I'd be going down to about the 7 delta. So about 37.90. And I'd be going up to about the 6 delta, 5,400. Okay. And this is what we would be doing. It's, whoa. Okay. This is what we would be looking at. You can see the skew to the upside is very large compared to the downside. So there's a bullish skew in gold, but this would be the gold Strangle in here. It's a pretty nice Strangle, especially if you look at gold overall. Right now, we were just at 45.80, and we're putting on the 5,400, so 1,000 points higher than the high, the recent high. And right now we're only at 4,300. So 2,000 points to the upside, and this 37.90 is way below everything. It would have to break the 21 to 50, the Bollinger Band. It would have to break the 100-day moving average. Okay, gold would absolutely have to crash. But so this would be my gold Strangle. I don't mind that it's skewed to the upside. I'm skewed to the upside, so I'm good with this. I'll put this in the Discord as well. So there would be my gold Strangle if I was doing that. All right, real quick review. We got to run Amazon. We have a Strangle on Amazon. It's doing fine. It's up 31% in 8 days. Can't beat that. We'll take that all day. AVGO, this is one of our Income poor man covered calls. I like these because I like them on more volatile. Why is GC better than gold? Because there's more leverage for me, uh, which means more danger. But you can use GLD uh, for gold instead of GC. Same thing as you can use TLT instead of ZB. Okay, it's just a leverage thing for me. I get a little bit more leverage. I have a much larger account. If you're trading a small account, I probably would consider using GLD and TLT to do some of these things. Uh, all right, AVGO, nothing to do here. Now, this is interesting because we have 3 days to go and all of our extrinsic is basically gone. So really, we should be doing something here because we're in the money and our extrinsic is only, in fact, let me pull up the extrinsic when we sold this, I think was what was that 1769, I believe. So hang tight. 1769, yeah. So we're gonna make almost $1,600 of extrinsic on this thing. Okay, love it. Okay, I'm okay rolling this thing out. So um, let's look to do that. Bear with me for a second. All right, at the 350.85 is where we are. 350.85. I'm going to roll. Okay, I like to do it on the table here. Let's roll this out, and we can roll it out to January 9th. We can give ourselves an extra week, and we can roll right back to here on AVGO, right back to at the money. 350.91 is where we are. 350.91. $350.90 is the price. Okay, yes, it's going to cost us money to roll this, so which is fine. I don't mind. 350.91. I know I'm being cheap here. There we go. So 623, 350.94. Okay, I'm using this to determine my extrinsic because when I go to follow me along here, I know we're getting long. Okay, we're going to go to our chart, our little table that we got. Okay, we're going to roll. So I just rolled 12.30 today. Okay, I'm going to buy to close. Okay, AVGO, and I bought to close it at 14.25. Okay, so it's going to cost me. I'm going to lose $1,000 on this. Okay, um, give me a second. Let's before we do this. Okay, right now, before I update anything, we're up 2,030. Okay, on this trade so far, right? $2,000.30. Okay, let's go back and put this on. Okay. Now I closed it. The extrinsic I closed this for was I closed the 337.5 call. Okay, so I had the 337.5 call, and when I closed it, we were at 350.94. That's $13.44. Okay, um, on that. Right. Yes, the 337.5 from 350. We'll just call 351. Okay. So $13 in the money on this thing. All right. So $13 in the money when I did this. So, but the extrinsic I got, so $13, it was in the money, but the extrinsic I sold this for was $17.69. How much extrinsic was left on this thing? Hold on, let me do this again. It was 337.5. We closed when we were at 350.90. Okay, I was $13. I'm just putting it here. I was $13.40 in the money, but I closed it for 14.25. Okay, so 14.25 minus the 13.40 is 85 cents. Okay, which so I have 85 cents of extrinsic, which was $170 of extrinsic was left when I closed it. If that didn't make sense or that was too fast for you, just go back and rewatch. Okay, but I closed it in the money after subtracting how much I made when I sold it. From the 13 some odd dollars was 80 some cents. Okay, so the closing extrinsic was $170, which means I made $1,599 on this trade. Now, the current value of the AVGO stock is 92.56 now. Okay, so remember when we started today, we were at 2030. Okay, after rolling for a loss, okay, and having some gains here, okay, I'm now up 2404. So I've made another, a couple $1,000 or a couple $100 on this trade, taking me to 25 on it. But I have now booked another 1,600 worth of extrinsic. Okay. Yes, I lost some here of intrinsic. Okay. So I lost like 2,800 of intrinsic, gained this. Okay. So it offset that. It offset the loss. Plus, I made money on the underlying moving higher. Right. So we're good. I like the roll. I think that was a good roll. I think NVIDIA would be similar to AVGO. I mean, I think it's got some juice to it. It's got some volatility. So I think you could do it there. If you look at my my income part, my cover called Leaps, NVIDIA is one of them. I have Hood, NVIDIA, maybe even Palantir would be good for income part, my cover calls now. Right now. So yes, I think NVIDIA and AppLovin as well. So I think NVIDIA would fit. It fits my criteria. All right. I know we're going long. I got to wrap up. I'm sorry. I did it again. Went long. But at least you can see how the extrinsic is working on these things. And if I go back in, do we have to do anything on gold? No. Lots of extrinsic left, so I don't really care what's going on. Okay. To me, it's only the extrinsic, not how much I'm up or down on that covered call. That doesn't matter. All I care about is the extrinsic amount. Strategy, 1,600 of extrinsic is left. Okay, we only rolled this yesterday out of 2,300. Nothing to do there. QQQ, 136 out of 723. And we're getting there, but that's not 90. That's not enough. Okay. And then SoFi. Okay. We're at 680 of extrinsic left. That's still a lot left for SoFi. And then SPY, we're at $165 out of weight 885. So there's still something left. You can see that the extrinsic that I'm making on like SPY and QQQ is much less than I'm making on strategy, gold, SoFi, things like that, right? Because the volatility is a lot less. All right. That being said, we do have a naked put in UNH. I did say I might want to do another strangle, but you have earnings coming up here on the 27th. I think we could possibly be out of this by then. If I was going to do a strangle, it'd probably be like 31 days. I still like my 7 and 6 delta. Even the short time frame on the stocks, I think are fine. Okay, 400 and 280 on UNH. Okay, 400 or 280. I think 300 is still a floor. I like this strangle. I think we can make some cash. So we're going to try it. Okay, I'm going to put it in for $1,000 of credit for me because why? We got filled on that EH, or we got filled on the 120-day naked put here. So that got filled. Okay, just got to be patient. And here we're looking for this strangle. Okay. Let's see if we get filled on it. But if I do this one, I could take in, okay, $1,000 on 5,000. That's 20% return, which means I'll get about 10% return in 2 weeks. And I'm fine with this. So if I lose, I will lose 1.5x, which means I'm going to lose $1,500 on a $400,000 account. That's not even a half a percent. Okay, so small spec trade for me in here on UNH. I'm going to leave it there and let's see if we get filled. All right, this is enough, guys. Hey, everybody have a happy new year. We'll be in Discord tomorrow. I don't know how much we'll be trading on it, but I hope this was helpful to you guys on the session today. I want you guys to have a happy new year. Hope this was helpful to you. I hope you got a lot out of trading with us this year. If you're new to the service, welcome aboard. Can't wait for 2026. Hopefully we'll have a great profitable trading year. We're going to stick to our strategies. I'm sticking to my core four stocks, which is ES, oil, gold, and bonds, or the equivalents on the stock side of those. And then we'll stick to just a couple income format covered calls and stocks. All right. Happy New Year, guys. Have a great one. We'll see everybody later. See ya.